Hello everyone, this is Osama Rizvi coming to you from Primary Vision Network, and welcome to another episode of Monday Macro View. Uh, we have been talking a lot about China and the Chinese economy and the disappointing data that keeps coming out of the country, the second largest economy in the world. And in fact, Mark, myself, we have written about it, we have done shows about it, but I always like to see the other side of the picture as well. And I thought maybe as is the case in many times, I think there is an exaggeration to the Chinese economic downfall as well. So a point of clarity here is that when I say that the Chinese economy is facing issues and this and that, I'm not saying that the country is going through what an article in The Guardian recently mentioned, like a Soviet-style collapse. I'm not talking about a collapse. I'm talking about how different indicators from China, which are actually going down, they are sort of putting the global sentiment, shifting the global sentiments from bullish to bearish, and sort of doing that corrective part where we become too positive or, and start to ignore the ground realities. But that is not to speak that the Chinese economy would end up in a bad place or something like that. I think as with the US economy and the major global economies, they tend to be quite resilient unless we have an unthinkable black swan event. So diving in, first of all, look at this. So there were different articles that I read, different research point of views, and one of them was that many people have started to compare China with Japan, what happened in Japan, and started to talk about a Chinese lost decade as well. And this article in Financial Times did a really good job, and it had some good, some bad, and some ugly points. I'm going to focus on the good ones. First of all, Chinese urbanization ratio is 65%. Japanese urbanization ratio exceeded 77% in 1988. Whereas, however, there's a catch. Chinese Hoku ratio is 47%. So when you take this ratio, and I would describe in the description what this exactly means and what is the system about and why it is important, you have a lower urbanization ratio as compared to Japan, therefore a larger potential for productivity increases. And productivity increases are associated with more potentials for labor migration. And if you look at the housing market, there has been a huge change in the housing market, but still there is a current gap of about 18% of total population between urban population and the Hoku population. So the potential housing demand can be of 2 million more housing units, or for 100 million families. So that goes on to say that the potential is still there. Secondly, if you look at China tends to be a huge market. We all know the stats. It has a large market potential. It has a huge pool of STEM graduates. It has a huge and comprehensive manufacturing sector. It is known and rightfully known as the factory of the world. China is becoming a leading player in EVs as well, and recently China just overtook Germany as the second largest car exporter, and about to overtake Japan in the coming years. If you look at the property side, so Chinese, there was, and we did a show about it as well, there was a lot of fear about deflation in China. If you take out the the fuel prices and energy prices and food prices, the core inflation in China still registered an increase of about 0.8%. So deflation, and as I tried to prove as I tried to show in the last show as well, that it wasn't the major issue. However, property sector is a major issue. Once again, this particular slide looks at the Chinese property investment, which has fallen, of course. But at the same time, we need to dig deeper a little bit. And when we do so, we find out that there are some problems in the tier 1 cities where affordability continues to be an issue and has taken a plunge. However, in tier 2 and tier 3 regions, where the majority of Chinese housing market is, the declines isn't that bad. So the ratio fell in tier 2 and tier 3. In tier 2, the ratio fell from 13.4 in 2010 to 8.3 in 2022. And in tier 2 cities, from 10.22 in 2010 to 6.1 in 2022. It is also important to mention that majority of the Chinese households are family units, not single units. If I'm not mistaken, it constitutes more than 55% of the total ratio. But that is once again to say that things are bad. China is on a weak footing, but not as bad as many people have turned out to be claiming. Look at this chart that beautifully shows this Chinese GDP and its contribution in the global economy. So China has generated about recently 41% of the world's growth in the past 10 years. That is huge, given that it's one country. This is almost double to the contribution from the United States, which is 22, and quite a lot than the contribution by the Euro area, which was 9%. Even if you look at the slowdown and other things, China would still account for about, somewhere around 25 to 30% of the global growth in the coming years, which makes it a key player in the global economy. And if Chinese economy undergoes a recession or a slowdown, other countries suffer as well. So it is also in the benefit of everyone, essentially, to keep it afloat. And there was another article in Asia Times which was titled "The China Contagion That Never Was." It was very interesting. Had a lot of indicators that showed that Chinese fear of a Chinese blowout is overblown. So one of them was CDS, credit default swap. We all know about it, but I'll still explain it in the description. So that is at 80 basis point, one of the lowest, on the lower side of its historic range, as you can see on the chart as well. The interest rate volatility is also on the lower side. It's actually less than the volatility we have seen in financial crisis and COVID-19 times, and it hasn't moved a lot in the previous month. If you look at another fact, Chinese are big savers. This chart is from, it is a little old, until 2016, but this really puts things into perspective. That is, look at the difference between, on the right side, China and the US about the household savings as a share of disposable income. That in the times of crisis, this turns out to be a big savior. So that is there. Finally, in terms of the market sentiment tracker, US manufacturing PMI continues to fall to 47. There was weak services data from Eurozone. China has cut interest rates, which has also sort of quelled some fears of a recession. Germany is heading for a second recession, actually. Things are pretty bad in Germany. Chinese construction activity fell by 71% from monthly average in 2019. On the brighter side of the things, oil prices are still on the upper end. Many people are expecting Fed to start unwinding soon. I do not. But still, I believe the fundamentals continue to point towards a recession, and sentiment seems to be surmounting the fundamentals. So that's all from today. I'll see you all next week. Thank you so much for watching.